Welcome back to the Economic Analyst channel. So the producer price report for May 2022 came out this morning, and we got a mixed bag overall. I mean, most of the news is bad because it's high inflation. Not all of it bad, but still there was more bad than good. A little bit of good in this. First off, let's go over the bad. When we take a look at all commodities, so the producer prices for all commodities, we had a jump of a monthly jump of over 3%. This is the second highest monthly jump that we've had in the CPI post-COVID, going all the way back to May 2021. And we would really need to go all the way back to the mid-1970s to see monthly increases this high. We were beginning to see a few spikes in the early parts of '08 with the run-up of gas and oil prices right before the bust of '08, but nothing that was continuous and systemic like we've been seeing post-COVID. On an annual basis, the producer price index for all commodities was roughly stable because we were rotating off that high May report of 3.21%. So the annual rate stayed at around 21.5%. But looking on the trend basis of where producer prices are headed for the rest of this year, until we start seeing a reversal in this trend, and I don't think that we will. And if you've been watching my previous videos, I've been showing you the relationship between money and goods produced against prices. It's looking like these producer prices will probably escalate for the remainder of the year. And it's no secret here, though, that there are geopolitical tensions, especially between the war in Russia and Ukraine, that's pushing up the prices of energy and food and exacerbating this. So more than likely, I believe we're going to see rising, escalating annual producer price increases. And at the rate that we're going, it's probably going to approach 30% by the end of this year. Now, if you've been watching the Consumer Price Index, I've been telling you that this peak that we saw back in March was likely a false peak and that we would see rising CPI inflation for the rest of the year. The trend seems to confirm that so far, at least. We'll see how things play out in the coming months. But one thing to note is that, as I pointed out, when you take a look at your all commodities for producer prices, when we start seeing rising peaks in that inflation, you can pretty much take that peak rate and divide it by 3, and that's what your annual CPI is going to hover around. So in this case, back in 2021, for November's numbers, producer prices had a temporary peak, at least, of 22.7%. Divided by 3, that would say that the CPI should hit about 7.5 to 7.6%. Well, by the end of 2021, the CPI did hit 7.1%, very close to that 1/3, and then within 2 months escalated over to 1/3. And right now, the CPI is trading at a little bit above 1/3 of the peak of the producer price index because the inflation rates are not subsiding. So if that trend relationship holds true, then if we start seeing a producer price index of 30% by the end of this year, and we very well may, that reinforces my opinion that we're going to see the CPI head around 10%, maybe even push 10% by the end of this year, and the trend in the CPI definitely tends to support that. The silver lining in this has been final demand. Final demand did come out at a high number of 0.8% month over month, but if we go all the way back to May, it was 1% month over month in May of 2021. So as a consequence, final demand's annual change actually dropped and moderated. This is the second month that final demand has changed and dropped, and we have not seen that ever since we've been seeing rising final demand prices since we've come out of COVID. Is this a signal that we're finally beginning to see the shift and that this is peak inflation? Not likely, because until we start seeing commodity prices coming down, we're really not going to see that drop in final demand prices, which represent producer price indices on the latter end of the production structure of the economy. Remember, final demand is basically your wholesale prices. The commodities feed into those wholesale prices. There's some services that feed into that too. When we look at the breakdown of final demand, we get a little bit of an interesting notion here on this month-over-month change. One thing to point out is that final demand food price inflation monthly inflation rate was flat. Now, that's very interesting considering that we saw this strong jump from March to April and a very strong jump from February to March. Probably some of that had to do with the Russia-Ukrainian invasion. And before that, from December to January and January to February, we were seeing strong monthly increases in final demand foods. Yet this month, it was flat. That's very interesting to note. However, energy prices soared in April to May as the northern hemisphere of the United States is entering the summer season. We're going to be draining and using up a lot more energy to cool our homes and run air conditioning and travel, which is putting upward pressure on energy after we got a brief reprieve in March to April because of milder weather. Now that we're having more inclement weather in the terms of record high temperatures, we're probably going to see these energy prices escalate. And indeed, what we've been seeing coming through the reports for gas prices through AAA and through EIA.gov is that gas prices are hitting record highs that they've never hit before. So more than likely, we're going to see these energy prices push up. Factoring out this final demand energy, we find out that that comprised over about 1/2 of the monthly inflation rate in final demand itself. Final demand goods jumped by 1.4%, and the goods price inflation is really where we're seeing the core of the increase in final demand. Final demand goods have increased by 16.6% year over year. Services have increased and escalated, yes, but they've escalated at a much more milder tone, relatively speaking, of 7.6% year over year. The monthly change this time was 0.4%, with increases all across the board, particularly to note in trade and then in transportation. So we're seeing prices increase, but foods may tend to take a temporary reprieve. Yet because commodity prices are showing no sign of slowing down on the inflation rate, I think it's too early to breathe a sigh of relief and say, okay, we're going to see some calms in the inflation rate. More than likely, the final demand trend is not setting a new trend. Instead, it's probably going to track much like it has been in the first part of 2022 toward the end of 2022, and we'll probably see the annual rate stay above 10%, maybe even reach 10 to 12%. And once again, that reinforces the notion that the CPI inflation rates are not calming down for the remaining half of 2022. Now, all of this is just doing a little bit of trend analysis. The trend can change, and I'll point it out when it does change, and maybe it will, hopefully it will, and maybe this projection, my prognostication on this is wrong, but my gut instinct is telling me that we're probably right. We should start seeing a calming down in the commodities index first on producer prices before we start seeing the calming down in final demand, which will then lead to a calming down in consumer prices. So I'm looking at the commodities index and waiting for this to drop first before I'm ready to breathe a sigh of relief and say, okay, final demand will finally moderate here. When we take a look at the stages of production for intermediate demand, we see that in the upper chains in stages 3, 2, and 1, we're seeing elevated price inflation rate, particularly in stage 2 intermediate demand. So that means that the bulk of price inflation is still hitting us in the front end of the production structure instead of downward on the downward end. So it means that higher prices is going to flow through to stages 3 and 4 immediately or sooner or later, and that will bolster those final demand prices. When we take a look at the final demand model that I have produced, which has a 95% accuracy rating at predicting what the next month's CPI monthly change is, it's pointing to a month-over-month change of 0.7%, which will lead to an annual change of 8.4%. Now, if that holds true, that's going to be a little bit below what we saw in May, which was a little bit below in the side of March. Yet, just tracking the trend of consumer prices right quick, it would have to call for this 0.7%. We really will need to see a flat food price inflation, and energy prices are already soaring in the month of June, so that's most likely to stay elevated. And as I pointed out, the shelter component of inflation is not likely to start calming down it will start picking up. So unless if we start seeing a little bit of a reprieve in the other parts, the non-shelter part of core inflation and a really flat food prices, I'm not really certain that we're really going to get down to this 0.7% month over month. More than likely, I would say that we're probably going to end up on the higher end of this 0.7%, though I don't expect it to break the model. When I say it's going to end up on the higher end, I'm thinking 0.8, 0.9, maybe 1% price inflation, which is much the same of what we've been seeing in the CPI for the past several months outside of the April's numbers, which dropped and went down up by only 0.3%. So more than likely, I think this 0.7% on the final demand number is a little bit low, but that's what the trend is certainly showing. That's what the model is certainly forecasting. And as I pointed out, it's been accurate within about plus or minus 0.5%. So once again, this is really showing that we're not seeing that peak inflation just yet. And until we start seeing that change in the commodity prices, this most likely means that there's more inflation to come. Guys, I thank you for watching this video. If you guys have any questions, just let me know. Drop a comment. Let me know what you think about all of this. If you like the content, if you like the information that I provided you, always show me some support. You can share my video wherever you want on any form of social media that you want. Click the like button on this video. Subscribe to my channel if you haven't already. And as always, click that notification bell so you're notified anytime I upload a new video and produce more content for you. Once again, guys, I thank you for watching this, and I'll talk to you next time.